mortgage holders are breathing a collective sigh of relief with the Reserve Bank cutting interest rates yet again this year, and more to come, and lenders passing them on in full. Lower rates mean smaller minimum monthly repayments for borrowers, but it doesn't mean you should rest on your laurels. There are more savings to be had if you remain proactive in the year of rate cuts. Financial advisor Ben Nash joins us from Pivot Wealth. Ben, good to see you. What should mortgage holders be doing now to get even more savings than the rate cut?
Well, I think making sure that you've got a good quality mortgage product that's competitively priced so that you're not paying any more than you need to on your interest rate is really important. Mortgages and mortgage repayments are one of the household's biggest expenses.
Yeah. So shop around, see if you can get a better deal.
Absolutely, make sure that you're shopping around. Also, the structuring of your debt, looking at your principal and interest only, and just making sure that you've got a clear strategy that is optimal.
So, rate cuts coming, everyone goes, yippee, my repayments will reduce, I'll have more cash to spend.
Yes.
But what are the advantages of keeping your rate higher, not taking those cuts?
Keeping your repayments the same will generally shave years off your mortgage. I was just looking at some numbers for a $1 million mortgage. You're saving around $150 a month based on 125 basis points cut. But keeping the repayments at that higher level, it cuts about 4 years off your mortgage term. And so with forecasts, if you're talking about a few cuts together, you're talking about a number of years shorter, potentially a decade or more even, bringing your mortgage down. So it's funny.
Yeah, that's a lot of interest that you're saving.
Hundreds of thousands of dollars in interest costs, but importantly that you want to be putting it to work. It's not to say that it needs to go into your mortgage. If you've got some investing that's going to be more impactful for you, then sure, but making sure that you're actually picking up the profit that you're getting from the rate cuts is the big thing. Absolutely.
Okay. What if you're on a fixed rate, fixed term loan at a higher rate, interest rates coming down, Reserve Bank saying more to come? Should you be renegotiating?
Well, you can talk to your banks, and typically when you're on a fixed rate, you do have the ability to exit it early, but it will generally come along with what's called a break fee. If you're on a variable rate, it's a completely different story. So if you do a bit of deal shopping around online and you can find a rate on a similar product, principal and interest, or owner-occupier type loan, call your bank, negotiate with them, and you can often get them to come to the table and reduce your rate without you having to go through all of the admin of actually refinancing your mortgage.
All right. Good tips for homeowners. What about renters? Is it a market where you could renegotiate your rent down? And what would be a good argument to a landlord?
Housing is one of our biggest costs, and so even a small saving each week can make a really big difference to your situation. Comparing the rental market for other similar properties to make sure that you're not paying overs for the place that you're in, having that conversation with your landlord or your property manager and seeing if they'll come to the table. If they won't, and you can see that you could get a cheaper property that's quite similar to what you've got, well, you've always got the power to up and leave, and then you can lock in the savings that way.
Ben, great advice. Good to see you, mate. Thank you.
No worries.